Everyone, welcome to the press conference release of GDP statistics for the first quarter of Statistician Malaysia. Yang berbahagia Datuk Seri Dr. Mohd Uzir Mahidin will preside over this joint press conference. We will begin the press conference shortly. Before we start, I have a few housekeeping announcements. Kindly silence your mobile devices. You can scan the QR code at the table in front of you to access the press materials. Please note that these materials will be embargoed until 12 p.m. today. Flash photography throughout the session. Today we would also like to invite your feedback for us on this event, so we will provide a QR code at the end for you to complete the survey. Thank you.
Yang bagus kan? Bagus. Kau dah beritahu dah, janganlah. Start. Sekejap lah. Apa ni? Kami bro. Video. Aku mesti ambil ni. Nampak lah, kelakar dia. Ini dia, salah. Ini yang statistik. Itu dia.
Good morning, everyone. Welcome to the press conference this morning. Without further ado, I would like to now hand the floor over to Governor.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh dan salam sejahtera. Terima kasih kerana menghadiri sidang APA pagi ini mengenai prestasi ekonomi negara pada suku tahun pertama 2023 dan juga perkembangan monetary dan kewangan oleh Bank Negara Malaysia dan Jabatan Perangkawan Malaysia yang merupakan agensi yang mengumpul dan menerbit statistik KDNK negara. Please allow me to continue the presentation in English for the benefit of our international audience. In the first quarter of 2023, global growth was modest. The economic rebound in China and resilient labour market offset the headwinds from goods to services, and down cycle in E&E sector, particularly for consumer electronics. Let me now hand over the presentation to Datuk Seri Dr. Uzir to announce Malaysia's GDP performance for the first quarter of this year.
Terima kasih, Gabenor. Pada suku tahun pertama 2023, ekonomi Malaysia berkembang sebanyak 5.6%, disokong oleh peningkatan perbelanjaan isi rumah, aktiviti pelaburan berterusan, pasaran buruh yang kukuh dan aktiviti pelancongan yang semakin rancak. Pertumbuhan mengikut sektor, pertumbuhan yang tertinggi dicatatkan di sektor perkhidmatan yang bertumbuh pada kadar 7.3%, sektor pembuatan bertumbuh sebanyak 3.2%, sektor pertanian bertumbuh sebanyak 0.9%, sektor perhubungan bertumbuh sebanyak 2.4% dan sektor pembinaan bertumbuh sebanyak 7.4%. Justru kita lihat di sini kelima-lima sektor utama ekonomi telah mencatatkan pertumbuhan positif pada suku pertama 2023. Bagi terma pelarasan musim suku tahun ke suku tahun, KDNK meningkat sebanyak 0.9%. In the first quarter of 2020, supported by further expansion of household spending, continued investment activity, firm labour market condition and higher tourism activities. On a seasonally adjusted quarter-on-quarter basis, GDP increased by 0.9%. On the demand side, growth was supported by private sector expenditure. Private consumption growth was underpinned by firm labour market condition and policy measure. Spending continued to expand across both necessities and discretionary items. Growth in private investment was supported mainly by structures. Turning to the supply side, all sectors continued to expand. The services sector benefited from improvement in both consumer and business-related subsector, supported by the continued recovery in tourist arrival and progress of construction activity. Meanwhile, growth in the manufacturing sector was supported by consumer cluster amid ongoing fulfillment of motor vehicle backlogs and continued growth in the E&E cluster. I would also like to highlight that, as a common practice, DOSM will periodically revise back the series of data of GDP components. In this current exercise, the data has been revised from 2020 onward, especially for export and import in 2022. So please also take note of the revision when you are reviewing and commenting on the current performance of the economy. Let me now turn to the balance of payment. For the first quarter of 2023, the current account recorded a lower surplus of RM 4.3 billion, or 1% of GDP. This was mainly on account of smaller goods surplus driven by moderation in external demand. In addition, primary income registered a larger deficit during the quarter, due mainly to lower investment income accrued to Malaysians from investment abroad. Looking at the financial account, FDI recorded net inflow of RM 12.0 billion during the quarter from reinvested earnings and continued equity injection by foreign investors. These investments were channeled mainly into the financial services subsector, as well as mining and manufacturing sector. The FDI were primarily from Mauritius, Switzerland, and Hong Kong. Before I hand over the presentation back to the Governor, I'd like to also inform on various initiatives done by DOSM. As you know, the more timeliness data is required by the country, and if we look at the what we done for external trade, normally we release 4 weeks after the reference month, So now we already shortened it for 2 weeks after the reprimand. And also, we also already released the GDP numbers on the monthly basis. And we continue to strengthen our role as the national office, how we can really accommodate the policy makers. So for from next quarter onward, we're going to release our first time the A1 estimate GDP that will be released 3 weeks after the reference quarters. So there will be more timeliness, and the normal GDP will be continue to be released. So I think this will be another step how we can really release more timely statistic that required by the country, and this will be bring this our national statistical office to the level as the advanced countries such as US, UK, South Korea, Taiwan, and Singapore, where they also release the A1 estimate GDP number. With that, now I hand over the presentation back to the Governor. Thank you.
Thank you, Dr. Seri, Dr. Uzir. Recent indicators suggest that the economy is on a firm track to expand between 4 and 5% in 2023. Malaysia is not at risk of a recession. On a seasonally adjusted basis, the economy has exceeded its pre-pandemic levels. The labour market continued to strengthen in the first quarter 2023 and is expected to remain supportive of domestic demand. The unemployment rate gradually improved towards pre-pandemic levels, driven by steady employment growth in tandem with the expansion in economic activity. As mentioned during the release of our economic and monetary review, the economy will approach full employment by the end of this year. Consumption indicators show continued growth in household spending. These include high-frequency data such as index of retail trade and passenger car sales, which continue to grow above its long-term average. On the investment front, existing large infrastructure projects are progressing without major delays. These include the ECRL, LRT3, and Pan-Borneo Highway. Turning to Malaysia's external performance, in line with expectations, exports growth moderated in the first quarter. Despite the slower growth, Malaysia's exports continue to be supported by our diversified products and trade partners. This performance was further cushioned by improvement in the export of services following further recovery in tourist arrivals. Even at the current rate of arrivals, we are likely to reach the forecasted number of tourist arrivals of approximately 20 million this year. As indicated earlier, we have chosen to be quite conservative in this figure. So to the extent that international tourism picks up, such as from higher tourist arrivals from countries such as China, there is some upside to our services exports. Let me now spend a bit of time on inflation. In line with the easing cost environment, headline inflation was lower, averaging at 3.6% for the quarter, compared to 3.9% in the fourth quarter last year. Much of this downward trend was driven by supply factors, namely lower RON 97 prices, which contributed around 2/3 of the decline during the first quarter. While core inflation moderated to 3.9% during the quarter, compared to 4.2% in the preceding quarter, it remains elevated relative to historical norm of around 2%. Core inflation is more indicative of demand pressures, and prices on core items may stay the same or increase even as costs moderate as demand remains strong. For example, food away from home remains high at 8.9% compared to its long-term average of 3.8%. So as reflected in this slide, the decline in headline inflation is largely due to cost factors. The blue bar which is core inflation, has come down, but only slightly and at a much lower pace. Of note, the current core inflation, as shown on the left chart, has remained high for longer. Even as costs have begun to moderate, strong economic activity has continued to generate demand-driven pressures, which have kept core inflation elevated. We can observe this beyond conventional demand indicators, such as in retail trade and credit card spending data, or even when we go out to shopping malls and restaurants and see long queues and traffic jams. Going forward, headline and core inflation are expected to moderate over the course of 2023, albeit remaining higher than pre-pandemic levels, averaging between 2.8% to 3.8% for the year as a whole. While cost pressures have eased in line with lower global commodity prices, core inflation will remain at elevated levels amid firm demand conditions and continuing improvements in the labour market. The outlook also accounts for the gradual rationalization of subsidies, particularly the revision in electricity surcharge for selected industry participants. The balance of risk to inflation remains tilted to the upside and is highly subject to domestic policy changes on subsidies and price controls, financial market developments, as well as risks to global commodity prices arising from both geopolitical conflicts and adverse weather events like the El Nino phenomenon. So let me now explain our monetary policy. After 4 consecutive OPR adjustments in 2022, we decided to pause at our January and March MPC meeting this year to take stock of the impact from the 100 basis points adjustment. Now, the latest data shows that there are no signs of overt tightening in the economy. With that, and amid resilient domestic growth prospects, the MPC judged that it was the right time to further normalize the degree of monetary accommodation. With this decision, the MPC has withdrawn the monetary stimulus intended to address the COVID-19 crisis in promoting economic recovery. At the current OPR level of 3%, the monetary policy stance is slightly accommodative and remains supportive of the economy. The MPC will continue to ensure that the monetary policy stance remains consistent with the outlook of domestic inflation and growth. I know there has been a lot of interest in the recent monetary policy adjustment, so let me take a moment to explain further on why we increased the OPR at our recent MPC meeting. First, I want to make it clear our economy continues to strengthen. GDP has already exceeded pre-pandemic levels. Unemployment has also fallen, and households remain resilient. And as I mentioned, after the 4 consecutive OPR adjustment in 2022, we do not see any signs of excessive tightening, for example, in consumption or investment. Recall that we have been on a normalization path since last year. So taking all of this together, we judge that it was the right time to further recalibrate our monetary policy in line with the stronger economy. Let me also emphasize that while inflation has been moderating lately, the greater expansion in our economic activity and firm domestic demand continue to contribute to price pressures, keeping inflation at elevated levels. This has been the trend in many countries. In some cases, monetary policy was slow to react, resulting in the need for policy interest rates to be raised more quickly and aggressively. We certainly do not want to be in that situation, so we must be prudent. We also wanted to avoid a situation of keeping interest rates too low for too long, especially when economic growth is firm, because this could lead to high inflation in the future and also the risk of financial imbalances. Let me be clear that we are not seeing signs of financial imbalances now, but as history has shown, prolonged low interest rates that are not aligned to the health of the economy can have damaging effects, such as overspending and overborrowing, which could push up prices even more. And when that happens, all of us will be affected, especially the poor and vulnerable. I must also correct the misperception that we want growth to be slower. That is certainly not true. Rather, this decision will help to ensure that we continue to grow sustainably and that inflation is kept in check. On financial markets, adjustment in the domestic financial markets have remained orderly despite concerns that the global economic outlook could moderate. In particular, banking sector stress in major advanced economies have contributed to global bond yields declining further towards the end of the quarter amid monetary policy easing expectations in the US. Despite the external uncertainties, investors' outlook for emerging markets, including Malaysia, has remained broadly intact. For Malaysia, domestic government bond yields declined during the quarter, in line with the movement in global bond yields. The regional equity market has been more affected by lingering uncertainties over the potential impact of global economic risks on the outlook for global corporate earnings. As a result, most regional equities, including the FBM KLCI, declined during the quarter. So far, in 2023, the US dollar has moved in tandem with shifting investor sentiments towards global economic uncertainties. The year-to-date decline in the US dollar index, or DXY, has been modest at 1.9%. Reflecting these global developments, the ringgit has exhibited two-way movements. On aggregate, the ringgit performance has remained broadly stable. While the ringgit began the year on an appreciating trend, this was short-lived due to the resurfacing of expectations for further tightening of US monetary policy. Subsequently, amid concerns over the banking sector stress in major economies, the ringgit reversed some of its depreciation against the US dollar. Year to date, the ringgit has depreciated by 0.6% against the US dollar. The bank will continue to monitor developments and ensure orderly market conditions to support financial intermediation and economic activity. Spillovers from the US banking sector stress have been limited. Unlike in the US, all banks in Malaysia are subject to the same stringent prudential requirements that are consistent with Basel III. Their business model and funding profiles are also different. Collectively, these factors continue to provide a high degree of resilience for banks in Malaysia against market and liquidity stress. This resilience is supported by high levels of high-quality liquid assets to meet stress cash outflows. These are largely in the form of placements with the bank and government bonds that can be pledged with the bank, amounting to over 760 billion ringgit as at March 2023, that can meet any potential additional liquidity needs. The banking system exposure to interest rate risk in the banking book also remains manageable. Under our capital rules, all mark-to-market losses in banks' bond holding, except for those held at amortized cost, are deducted from capital. An internal simulation concludes that even if we were to revalue the bonds that are held at amortized cost, the bank's capital would only reduce by 1.1 percentage point, and the resultant capital ratio is still well above the regulatory minimum. Turning to credit conditions, credit the private non-financial sector moderated to 4.2% as at the end of the first quarter. This was due mainly to slower growth in outstanding loans as loan repayments growth outpaced that of disbursements. Outstanding corporate bonds also grew at a more moderate pace. Notwithstanding this, the demand for loans has remained forthcoming and has been supported by sustained approvals. Of note, the higher growth in business loan applications during the quarter was driven by investment loans, particularly for the construction and the purchase of non-residential properties. In the household segment, growth in loan applications was broad-based across most types of loans, reflecting sustained demand, particularly in loans for the purchase of houses and cars. In line with improving income, the quality of household borrowings remains sound. This has also been supported by prudent loan affordability assessment by banks, which help to ensure that borrowers have buffers against rising costs. Impairments remain low and within expectations among borrowers from all income groups. Majority of borrowers exiting repayment assistance programs continue to be able to maintain good repayment behavior with limited signs of difficulties. In line with this, leading credit risk indicator such as the Stage 2 loans continues to improve, further suggesting that additional impairments are likely to remain manageable. I wish to stress that it is not true that the increase in the OPR has caused a rise in bankruptcies. None of the figures are showing that. On aggregate, households continue to hold financial assets in excess of debt, which enables them to manage higher borrowing costs. Lower income borrowers also have a larger share of fixed-rate loans, which are not affected by changes in the OPR. Of course, we acknowledge that some household borrowers may continue to face financial distress. Assistance continues to be available for such borrowers in the form of customized repayment programs from banks and AKPK to ensure that borrowers can sustainably service their loans over the longer term. Financing activity by banks and DFIs to SMEs remain robust, especially with disbursements sustained above quarterly trends seen before the pre-pandemic levels. SMEs' repayment capacity on aggregate also remained intact, and it continued to outpace disbursements. I'm coming to the end, so I want to reiterate that on the whole, the economy is no longer in crisis and has in fact continued to gain strength. This prognosis is borne by most economic indicators. The critical ones are shown here on this chart. The IMF, World Bank, ADB, EMRO, international and local analysts also have arrived at the same conclusion. We acknowledge there are pockets of segments and sectors that need help due to their circumstances. Help remains available for those in need. With all these conditions, it is timely, necessary, and warranted that monetary policy is recalibrated to make sure that we continue to be on a sustainable growth path. So let me now conclude. The Malaysian economy expanded by 5.6% in the first quarter this year, driven mainly by private sector expenditure. Growth is projected to average 4 to 5% for 2023 as a whole, anchored by firm domestic demand. Risks to the growth outlook are fairly balanced. The downside risks stem primarily from external factors. Meanwhile, upside risks are mainly from domestic factors, such as stronger than expected tourism activity and implementation of projects. Meanwhile, on inflation, both headline and core inflation are expected to average between 2.8% and 3.8% for this year. I have now come to an end of my presentation. My team and I, and Datuk Seri Uzir and his team would be pleased to answer any questions or any clarification that you may need arising from the announcements of today's GDP performance for the first quarter. Thank you.
Thank you, Governor. At this juncture, I'd like to call for questions from the media. If you have any questions, please feel free to raise your hand and our mic runners stand ready to pass you a mic. Please state your name and publication before sharing your question or comment. We will take your questions in 3 segments. First, on the economy, second segment on the financial sector, and the last on other topics. Now I'd like to invite questions from the floor on the first segment, the economy.
Hi, Governor. Here on the left. Yes. I'm Anissa from Bloomberg. Speaking of economy, as the Governor of the Central Bank, you've steered us through the pandemic-related recessions, guided Malaysia so that it's become the fastest growing economy in Asia last year. So I think the big question on everyone's mind is about your contract, which is set to expire next month. I mean, for continuity's sake, we would really like to know whether you intend or are interested in extending your contract as the Governor. And if not, have you discussed a possible transition plan with the government?
I will take that in part 3. I will take that in part 3 of the Q&A today.
Okay, please remember to take that.
Yeah.
Okay. Please.
Thank you, Anissa. Any other questions on the economy? The lady here on my right.
Hi, I'm Anshi from
Oops.
Sorry, I think...
No. Can you repeat again?
Hi, I'm Anshi from BFM. You mentioned earlier regarding the OPR hike might not doesn't really concern as in the general population will still be able to repay their loan. Can you just give us a sense of how the OPR hikes might or might not affect the loan default numbers, just to let us know how controlled these interest rates hikes have been on the general population and what we can infer from this number? And the second question is regarding to inflation. So what do you think of a potential subsidy removal might do to your modeling, and how will you counter that?
Thank you, Enchi. Maybe I'll take another question. Mahad.
Assalamualaikum, saya Mahanum dari Berita Harian. Soalan pertama saya nak tanya, ada persepsi yang kata bank negara seolah macam kejam bila dia naikkan OPR. Adakah benar sedemikian? Lepas tu, ada juga yang mengatakan OPR naik menguntungkan bank. Boleh bank negara jelaskan? Dan ketiga, adakah bank negara benar-benar bebas dalam membuat keputusan mengenai OPR?
Thank you, Mahanum. I think we'll take these questions first. So, Governor, there are a few questions surrounding OPR and inflation. The first one is whether on the impact of OPR on loan repayments. The second question is on whether or not our inflation OPR decisions take into account subsidy rationalization. The third question is the impact of OPR on the vulnerable households. And the last question is whether or not our OPR actually, there are two more questions. One, whether or not OPR actually benefit banks, and whether or not Bank Negara is free to make our OPR decisions.
Okay, on the first question, the impact of the increase in OPR, we have increased OPR by cumulatively by 100 basis points last year, right? So can we show this chart on the household resilience? And you can see from this chart that, stage 2 loans, which are much more leading indicators, because impact loans that you already missed your repayment, right? So it is much more of a historical number. So when we look at, the more leading indicator of a stage 2 loan, so these are loans that has exhibited higher credit risk, that has been coming down. And, a bank can only classify a loan from stage 2 to a stage 1, which is a better classified category, after the borrower has been able to service its loan for 6 consecutive months. And some banks, they are even more prudent. They would look at 12 consecutive months. So you have a situation here where stage 2 loans have been coming down, which means that the borrowers have been able to service their loans. And on top of that, when we look at some of the loan indicators, loan repayments have exceeded loan disbursement, not just by the households, but also by the businesses. But like what I said, I do acknowledge, so this is at the macro level. And when it comes to the lower income households, can we take a look at that other chart? Most of their loans, more than 50% of their loans are fixed rate. That means their loan repayments will not be affected, even though we increase OPR. So the impact on the lower income household is much less. But having said that, we do acknowledge that there could be some who, because of their financial circumstances, may not be able to service, the higher loan installments, and help is available. And we have seen that the banks have been very forthcoming in giving out repayment assistance and drawing up, a much more customized repayment plan to suit each particular borrower's financial circumstances. Because at the end of the day, it will be a win-win situation if, for the banks and the borrower, if the borrower is able to pay the loan fully at the end. And in terms of the impact, like I said, that, so you already have, that cumulative impact of 100 basis points, and this is the numbers that we have seen. And to be sure that, the borrowers are able to sustain, and that's where in our financial stability report, for example, we have shown, sensitivity analysis, what if the OPR were to be increased by another 100, 200 basis points, and what that would look like. And I think the results are also published in the financial stability review that we published last month. So if you would like to have further clarification on that, please feel free to contact our communication department. In terms of the subsidy removal, that has been factored in our 2.8 to 3.8% projection for this year. So we have factored in, some subsidy rationalization from the electricity, the removal of the electricity subsidy for selected industry, and possible further subsidy rationalization. So that has already been factored in our inflation outlook. Okay, I need to answer the other set of questions. Yang kejam naik OPR. Mana lagi kejam kalau kita punya inflasi goes out of control. So kalau kita punya kadar inflasi menaik mendadak, everybody's purchasing power will be impacted, regardless whether you have a loan or not. So your RM1 would buy less. So kita naikkan OPR kerana we want to make sure that our economy continues to grow sustainably, not just for today, but for months and years to come. So we do not want to have a situation where we just look at the today, have growth, and further down the road it's not sustainable, and we have high inflation and even a recession. So that's not what we are here for. Our Central Bank Act is very clear. Our mandate is to promote price stability, monetary stability, conducive to the sustainable growth of the economy. Adakah kenaikan OPR menguntungkan bank? Yeah, in terms of the interest income will increase, but it will depend, right? Whether they have fixed rate loan or floating rate loans. So kalau a bank has more fixed rate loan, dia punya interest income takkan naik. But their interest expense, the interest that they pay on their deposits will increase. So tak semestinya, and here I want to stress, all the measures that we introduce, it is not, the reason why we introduce policies or do certain things, it is not to make sure that the banks are profitable. If that is the case, we will not introduce all these prudential requirements asking banks to hold capital buffers, liquidity buffers, because that costs a lot of money also. So we are here, when we regulate and supervise the bank, it is to make sure that the banks are sound, so that they can continue to get the confidence of the depositors and continue to be able to perform their intermediation activities. And we have seen, right, in the US, when depositors lose confidence in the bank, like in the case of SVB, the kind of adverse impact it will have on the economy and the financial system, and we certainly do not want that. Adakah MPC bebas? Yeah. The MPC is independent, and you can look at the CBA that says that the monetary policy is decided by the Monetary Policy Committee without external influence. Thank you.
Thank you, Governor. I believe we have questions on this side of the room.
Hi, Rosanna here from Reuters. Tan Sri, just some analysts have said that the last week's OPR hike marked the end of your tightening policy. Can we get some thoughts on that? And also, can I just check on the current account figures for Q4? Is it 27.5 billion or 25.7 billion? Was there a revision? Same with the FDI figure as well. Hold on, what was it? I think it was stated there was 19.2 billion, not 19.3. Just wanted to check on those figures. And also, just echoing my colleague from Bloomberg on a question of continuity. Thanks.
Thank you, Rosanna. Maybe may I invite other questions on the economy? Lady down there.
Assalamualaikum Tan Sri, Zarina Bernama here. Just wondering that the low base effects no more there, and 5.6% is quite commendable. Are we actually growing stronger than the pre-pandemic level? Thank you.
Thank you. I believe there's also a question on the right, if you may just take it.
Hi, I'm Dishan from Nanyang here. Okay. Since the 5.6 growth performance is exceed the expectation, so is BNM prepared to revise your growth target upward? And if the domestic growth is continue to be resilient, is MPC will MPC raise the OPR further in this year? Thank you.
Okay.
Thank you.
Yeah.
I think we'll take these questions first.
Yeah, I think I got
Alright.
it. So if I don't, you come and chip in, Waishan.
Thank you.
So whether we are at the end of our tightening cycle or whether we will increase our OPR further, and I know that a lot of people are anxious as to whether there will be more OPR hikes to come. There are many things happening on the global stage, be it price pressures, growth, or financial stability concerns. So depending on how these things turn out, they may have an impact on our domestic economy. So, MPC would need to monitor all these evolving conditions. Any further normalization to the OPR would depend on whether there are any developments that will materially affect and shift our assessment on the outlook to domestic growth and inflation.
All right. Thank you, Governor. I think there was also a question from Rosanna on Reuters on our current account figures as well as FDI.
That's why I'm going to pass it to Datuk Seri Uzir and his team.
It's 27.5. 27.5 billion.
There was a revision.
Yes.
Yeah. I think there was a revision, Datuk Seri, like the current account for the fourth quarter last year. It was much higher than what was published last year. From berapa ke berapa? Never mind, we can get back to you, Rosanna, on that. And whether our 5.6% growth is the strongest pre-pandemic, I think I have, it is stronger compared to the average that we had pre-pandemic. Of course, it is much lower than the one that we recorded last year because of the base effect. So this chart shows our economy compared to pre-pandemic. So in the first quarter, we are about 8% higher compared to the pandemic. And because as to whether we will revise our growth forecast for this year of between 4 to 5%, taking into account the more favorable outturn in the first quarter this year of 5.6, at this point of time, we are not revising our growth projection, both for inflation and growth.
All right. Okay. Thank you, Governor. Can we invite more questions? Jagdeep at the front.
Hi, Governor. Jagdeep from the Star. Just want to look, when you posted the inflation numbers just now. Is there a concern that inflation is a little bit sticky on the upside because it is still averaging above what you're forecasting for the year? And given that stickiness, how do you foresee, given that there's going to be a subsidy rationalization in petrol prices after the election likely, is that going to put even more pressure on inflation because of the knock-on effects from that? And how is Bank Negara going to tackle this or suggest to?
Thank you, Jagdeep. Maybe invite another question from the floor. Priya.
Hi, Governor. Priya from The Age.
Amanda, no, it's okay, Priya.
No, Amanda, go ahead, no problem.
Okay, yeah, Amanda here. So just going back on the OPR, maybe just to give us, add some color to the other side of the coin. What will happen to inflation? Do you have like a modeling where if OPR was not raised to 3%, how will it affect, I mean, in terms of pricing, price stability, in terms of inflation, and also maybe you could just give us some color. Because, and also, just to nip it down at a very simplistic level, especially during the Ramadan period, I think we've seen reports that a lot of people are not really, they were just window shopping. I think we saw a lot of reports. So just to get some perspective from you, Governor. Thank you.
Thank you, Amanda.
Okay, I think that's it.
All right.
So yes, prices are sticking upwards, and so that's why we have shown that, although headline inflation has been moderating, that is because of 2/3 of it is because of RON 97, because of cost, and this moderation in costs will not be passed to the consumers, the end prices, if demand continues to be strong. If you are selling nasi lemak, for example, and if the cost of producing nasi lemak has come down, but then you have like 100 people, queuing at your stall to buy nasi lemak, you will not, reduce your prices because the demand is strong. So we need to then recalibrate our monetary policy to make sure that that is the demand pressures matches the supply. So and for us, in terms of managing the inflationary pressures, we need to cater both the demand side and also the supply side policies, and that's what the government is looking at, how then do we increase the supply so that there will be greater, there's greater equilibrium between the demand and supply. And in terms of the impact of the subsidy rationalization, it's something that we have already imputed in our inflation forecast. This is something that needs to be done because if we want to build fiscal buffers, and if like what we have, I had mentioned just now, there are still vulnerable groups, there are still groups that require assistance. So, your financial assistance have to be a bit more targeted. It cannot be too broad-based because the limited amount that you have is being spread out over, more people, and that results in less assistance that can be given to a much more vulnerable group. So we need, to rationalize the subsidy so that, more meaningful help can be given to the more vulnerable groups. And yes, there could be, some inflationary impact. But then if you do it in an environment where inflation is coming down, so the impact may not be strong, or when demand is not excessive, so you would be able to minimize the second round impact. One can even argue, Jagdev, if a blanket cap subsidy is more inflationary. All right, so so you are, moving from, so this targeted subsidy over the long run will help inflation, in fact. In terms of, spending, I mean, the numbers speaks for itself. We see, can we look at the spending numbers? The chart that shows the retail trade. This is the numbers that we have. It's even exceeded pre-pandemic levels. Yes, anecdotally, you may say that there's a lot of window shopping, but that is not being borne in the statistics. Retail spending have exceeded pre-pandemic. Vehicle sales have exceeded pre-pandemic. And that is also reflected in the numbers. Private consumption is about, 5.9%, grew by 5.9%. Services sector has improved, continues to improve. Wages continues to improve in real terms. So not on nominal terms, but even in real terms, wages have continued to increase. So yes, there could be pockets, but at the macro level, the statistic shows that spending remains robust, investment remains forthcoming.
Okay, thank you, Governor. Maybe we'll take another round of questions on the economy. I think Priya, you had questions earlier we didn't get to address.
Hi, Governor. Priya from The Age. Governor, you said that the economy is continuing to expand and it's no longer in a crisis. May I ask, do you think the current health of the economy is strong enough to withstand another OPR hike in the next MPC meeting, or will you be leaving it to the leading indicators before making such decision? And my second question is, the consumer spending is always seen as a wild card, especially now with the higher interest rate. Do you think with the inflation rate going up, and you projected that it to remain sticky, that it might be, consumers might be scaling down on their spending that might impact or risk further growth of the economy?
Thank you, Priya. Maybe one more question from Jason.
Hi, Jason here. Madam Governor, I'd just like to ask, clarify the 4Q figures. 7.1 is a revised number, right? It was, I remember it was 7 during the previous. Yes. Okay. And secondly is that the forecast of the inflation forecast of 2.8 to 3.8, does that include further subsidy rationalization? Yes. Does it include fuel?
Yes.
Or it includes fuel rationalization as well? Okay, thanks.
All right, thank you, Jason.
That was an easy question to answer. So I'm going to get some of my colleagues to weigh in on Priya's question. Rashid, would you like to go? And of course, I would invite Jess and Sham also to weigh in.
Thank you, Governor. I think in terms of the strength of the economy, I think you heard Governor mention just now in terms of where we are, and fundamentals are quite strong there, right? Even the PC is also very strong. So that's the strength of the economy. In terms of whether there'll be more hikes to come, I think we have to see in terms of the many things happening in the world. And whatever happens there will also have an impact in Malaysia. So that's where we will assess in terms of what the impact on the Malaysian economy, the outlook of the growth, and also inflation. That's where we make a decision in terms of whether to adjust for the OPR or not. That's the considerations that we'll take. Thank you.
Okay. Thank you, DG. Maybe we'll take one last round of questions on the economy. I'm a bit mindful of time.
Yep. On the impact on consumption, there could be some impact, but at the same time, again, when we calibrate our multi-policy, it is to make sure that there is sustainable growth over the medium term. So there could be some short-term adjustment, but more importantly, that is the growth outlook that would be preserved by recalibrating your multi-policy today. So if you wait too late to make sure that your monetary policy is in line with the economic conditions, what will happen down the road is either you have too high an inflation or your growth will be much weaker because of that.
All right, thank you, Governor. I think I'm a bit
read the numbers, asking about the revision. The original numbers is 25.7 billion, and the new numbers I mentioned just now is 27.5 billion. And also we actually revised the overall numbers as well. The original number for FDI 2022 47.2 billion. The revision number 55.1 billion for the current economy.
Thank you, Datuk Seri. I'm a bit mindful of time, so this will be the last round of questions on the economy. I believe the gentleman here in front and also on the right-hand side of the hall.
Good morning, Tan Sri. Joseph from the South China Morning Post. Just a couple of quick questions. As you mentioned, exports have been a little bit down over the first quarter. We're looking at recently Prime Minister Datuk Seri Anwar Ibrahim had gone off to China and secured about 170 billion worth of investment commitments. Do you think that could probably help over the short and medium term to bolster exports to China, especially since they are our top trade partner? And on tourism, regionally everyone is expecting the return of the Chinese tourists, Malaysia included. Do you have any expectations that should they decide to come back in force, would that maybe help bolster growth for this year and moving forward? Thank you.
Yes. Thank you. Questions on the right-hand side of the hall? I think I saw a hand.
Governor, I'm Victoria from China Press. Okay. Apart from the interest rate policies, what are the other measures that can be used to control the inflation? And given the current trend of ringgit against the USD, the downward trend, what is your view on the ringgit outlook for this year? Thank you.
Thank you, Victoria.
Yep.
Governor.
The answer is yes to both your questions. It will definitely help our exports. And also, like I said, the tourism, we are seeing very encouraging results. Export of services grew by about 58% in the first quarter, and that is mainly due to tourist arrivals. And like I said, that we have been very conservative in terms of projecting the number of tourists that may visit Malaysia, about 20 million. And we think that, you know, there is a lot of upside to that. If we were to just use the actual number that we have seen in the first quarter, definitely the 20 million is something that will be achieved this year. So there's a lot of upside on that. So, and that's why we had said that, you know, the balance of risk to our growth is quite balanced. The upside risk will come mainly from domestic factors. If, let's say, tourist arrivals are much more than what we had anticipated, so that will have an upside, or, you know, the realization of some of these investments. The earlier realization of some of this investment is the other upside risk to our growth. In terms of, you know, what are the other instruments that we have to control inflation from a macroeconomy point of view, we have to look at both demand side policies and supply side policies. So when it comes to demand management, the most effective tool is monetary policy. On the supply side, you know, and that's where fiscal will have to come in. And the government has done a couple of measures, from price controls and even, you know, enhancing supplies by, you know, encouraging greater competition, more imports, abolishing AP. So there's a lot of instruments that we can use to make sure that, you know, inflation remains manageable. So, but it requires both demand side policies and supply side policies.
Governor, there was a question on ringgit outlook.
Can I get Jess or Shaun or Adnan?
Thank you, Governor.
They think that they can have an easy time, you know, sitting at the back bencher. So I need to, you know, surprise them every now and then.
So as far as the ringgit outlook is concerned, it will continue to be probably most likely influenced by the global developments. So we, being an open economy, the ringgit will be influenced by our trading performance against our partner countries, as well as the investment outlook by investors, foreign investors. So we would expect that to be pretty much driven by the sentiment as well as the direction of the global interest rates in particular. So that would be our basically our broad outlook for the year. For the ringgit itself, I think for the year we would look also at the performance of our against our trading partners, which actually we haven't we have only seen a minor appreciation, and so I think insofar as the performance that matters most to our economy is really the performance against our trading partners, as opposed to the performance against the major currencies, which would more be dominated by the global developments. Thank you.
Thank you, AJ Adnan. I think given the time, we have to move on to the second segment of the questions on the financial sector, if any, financial sector. Anji.
Thank you. I'm Anchi from BFM. I just want to get an insight on the Asian Monetary Fund proposed by the Prime Minister. So he's basically saying that we could have like an Asian Monetary Fund to reduce the reliance on US dollar. So how would this impact, how would the fund look like, and how would this impact the strength of the ringgit?
Thank you, Anchi. Maybe we'll take one more question from the right-hand side of the hall.
Hi, Tan Sri. Tamini from Free Malaysia Today over here. As you've mentioned, the economy is growing, driven a lot by domestic demand. However, it's been noted that, for example, Bursa Malaysia's indexes have really been a laggard in the region, and local equities have experienced a lot of selling in the last few months. Would you say that this is a concern, or it's not so much for a concern towards our overall growth?
All right, maybe one last question from the right-hand side of the hall. The gentleman right in front, yes.
Hi, my name is Seiichi from GG Press, a Japanese news agency. I'd like to ask a question about statutory reserve requirement. Is there any, how do you see, its future? No, I mean, how it had been lowered during the COVID, and is there any possibility for it to be raised in near future?
All right, thank you, Governor. I think we'll take these three questions now.
On the Asia Monetary Fund and the reduced reliance on US dollar, if you look at it, since the Asian financial crisis, the region has come together to strengthen what we call the regional self-help mechanism. So that we have a mechanism that will continue to foster regional financial stability. So a lot of initiatives have been put in place from the CMIM to the setting up of MRO as a regional surveillance. So, and when you look at the developments on these two fronts, it has been enhanced from time to time. So, so what we're looking at is again further enhancing, improving the efficiency, effectiveness of such a mechanism to make sure that it continues to be fit for purpose, it continues to be able to serve the region well, so that at the end of the day, we do not want to see what we had in the Asian financial crisis, right? We have regional financial stability that had impacted the regional economy. So ASEAN, together with the +3, Korea, Japan and China, we have come together to see how best then do we continue to have an efficient arrangement regionally to make sure that we continue to preserve regional financial stability. So, the Asian Monetary Fund could be the next step. So, so that, again, we, like in anything else, we continue to see how best do we enhance, how best do we make it much more effective. On the reduced use of US dollar, in fact, actually Malaysia has been one of the pioneer countries in terms of promoting the use of local currency for the settlement of trade and investment. So we have the local currency settlement framework that we signed with Thailand and Indonesia, for example, to promote the use of local currency. And we are actually among the first countries to sign a swap agreement with the PBOC to promote the use of yuan and ringgit to settle trade and investment between China and Malaysia. And Bank of China, for example, has been appointed as the onshore settlement bank. So so this is not something that is new. We have been promoting that because giving businesses a wider range of options to do settlement can reduce the cost of doing business, and that is why the motivation for us to promote the use of local currency. In terms of whether financial markets, there are two sides of the financial market. You have the fixed income market and you have the equity. So when you look at our fixed income market, actually bond yields have tightened. So most of the inflows have been coming into the bond market. And so there could be some rebalancing of portfolio between the equity and the fixed income. And whether the performance of the Bursa will have an impact on the economy in terms of our growth projection, it will not. In terms of the reserve requirement, yes, during the pre-pandemic, our statutory reserve requirement is about 3%. But during the pandemic, if you recall, we have given certain flexibilities to the banks to recognize the holding of government securities towards meeting the statutory reserve. That has expired beginning of this year, last year. So we have reverted back to the pre-pandemic practice where it is the reserves that they hold with Bank Negara which will be counted towards meeting the statutory reserve. As to whether we will increase the statutory reserve, we will look at it, and see what is the structural liquidity in the system, and whether the combination of tools that we need to implement to manage the liquidity in the system warrant an increase in the statutory reserve.
All right, thank you, Governor. Unfortunately, we have run out of time, but we still have to address that one question on your tenure, Governor.
Well, a formal announcement will be made in due course, and just let me just end to say that the opportunity to serve the country is both a responsibility and a privilege. So let's leave it at that. So with that, I would like to thank everyone for taking the time to come here to listen to the latest economic outlook. And because it is still Shawwal, I don't think it is too late for me to wish everyone Selamat Hari Raya. Thank you.
Thank you, Governor. So all our media friends, I hope you have had a productive session today. And if you have any unanswered questions, please contact our strategic communications team who is around today, or at communications@bnm.gov.my. We have prepared some refreshments outside the hall, but as they say, there is no such thing as free lunch. So before you go, I'd like to invite you to scan the QR code on the screen for the feedback survey. Thank you.